Okay, good afternoon, guys. Hope everybody's well, and welcome to Quadruple Witching Friday. So that's the first thing to say about today's session, guys. It's quadruple witching. Okay, now we've got no economic data, but this is likely to be, well, certainly will definitely be the highest volume day of the week. Now, quadruple witching, just to refresh your memories, is the day on which 4 different derivatives contracts expire. Okay, so today we've got stock index futures, we've got stock index options, stock options, and single stock futures, all expiring. So all the December contracts for those 4 products are expiring today. So we rolled over, at the end of last week, in that we're now trading the March S&P, okay, but the DEC contract that we were trading doesn't expire till today. So what happens on days like this is you tend to get a lot of volume going through the market, volume that's not necessarily conventional. It's people rolling over, what's called rolling over. So they'll be, if they're long December S&Ps, they'll sell December S&P and they'll buy March. Okay, so that's what's called rolling over. So a lot of the volume we'll get today is actually just people shifting their futures and options positions into the next front month contract before expiry. What this means is it creates a lot of volume, and actually it's normally a very choppy session. Okay, quite a lot of what's called noise. The increased volume doesn't translate through into better trading opportunities. Okay, these days are often pretty dangerous. We'll quite often get erratic moves in either direction at any point for no apparent reason. So in terms of trading conditions, these days are generally not very favourable. So what we need to do is make sure that we don't get caught up in any of this choppiness. Be cautious. Realize these rapid market movements are not opportunities. They're probably just short bursts in either direction. It'll just be big positions being put through the market when some of the big players are rolling over their positions. Okay, so you've got to be very careful on days like today. Okay, that being said, let's just talk about the market. So I've got my 1 hour chart up here. So we're looking at, we sold off really quite sharply, I guess, from 11.12, which was the high on Wednesday. We've been trending lower through till pretty much the close last night. This is off for a few reasons. Yesterday in particular, Citigroup weighed on the markets, and the financials in particular. They rolled out their share issuance. They priced it slightly under what the market was expecting at $3.15. So that Citigroup stocks took a hit yesterday, down at over 8% at one point. Coupled with that, FedEx announced some disappointing, well, their earnings numbers were good, but their forecast for their next quarter was reduced. So that hit the FedEx share price and also created a little bit of negative sentiment. Meredith Whitney downgraded Morgan Stanley and Goldman Sachs for 2010 and 2011 outlooks. So again, that added to the downside for financials. So the Citigroup and the Meredith Whitney in combination created, the financial sector certainly got hit yesterday. And then also we had worse than expected jobless claims as well. Okay, so there are the few factors that contributed to the downside in yesterday's market, and we got right down to 1090.75. Okay, so since Wednesday, quite a relatively big correction, and whilst all this was going on, of course, we've had the dollar increasing its strength, particularly against the euro, hitting 3-month lows. So this just adds to this downside momentum for stocks. Okay, so everything really pointing in one direction. So even though in the face of all these negative influences, I actually think the stocks have been pretty resilient. This morning we've been back over 1100, although we have just briefly had a pretty sharp move lower down to the pivot. But some resilience this morning coming in, with markets responding to some good earnings overnight after the bell. Oracle, Research in Motion, who produced the BlackBerry, and also Nike. All three of those stocks beating their earnings per share and beating their revenue. So some good earnings overnight. We've had a rebound in the financials this morning after yesterday's disastrous day for financials. We've also had the energy sector outperforming this morning, with oil in particular benefiting from some cold weather conditions and also a pickup in fuel demand. Okay, so oil back over $74 this morning. We also had a rumour which has yet to be confirmed, so take this with a pinch of salt, but we had a rumour that Arabian forces have been storming Iraqi oil fields and raising Iranian flags. Okay, just after this, well, we had that rumour, and actually we had a situation where the stock markets, sorry about that, we had that rumour with the oil. Let me just repeat that. We had that rumour. Let me just repeat that. So we had rumours about the Arabian forces storming Iraqi oil fields and raising Iranian flags. Okay, so this added, I think, a little bit to the upside in the oil market. And at that point, we actually got our sharp sell-off. So the red candle you can see here, where we moved from above 1100 down and below the pivot, we had the situation where we had oil moving sharply higher and stocks moving sharply lower. That is not a situation we are used to, and that type of rumour would be one reason why that those market sort of situations would happen. You know, if you've got a sort of geopolitical occurrence in the Middle East, you can quite often see oil moving higher and stocks moving lower, and that seemed to be, you know, that rumour seemed to fit the market movements at that point. But that's, let me just confirm, that's definitely still a rumour. That has not been confirmed. The move lower in stocks could well have been quadruple witching sort of activity coming into the market. So we really don't know on that side yet why we had a move in opposite directions on oil and stocks. Let me show you the oil market briefly here, actually, just to give you an idea, because oil has continued its rebound from you know, what had been 9 down days in a row, and you know, the rebounds picked up a lot of pace. We're nearly up to the sort of 50% retracement of that 9 down day, 9 consecutive down days. So oil sharply higher again today, back at over 74, although it's trading 73.83 at the moment. But oil really benefiting. Let's check out the euro dollar, because as I said, the dollar has continued to strengthen yesterday again, hitting new 3-month lows. If I can find my chart. So here's the trend channel we've got in place, which is looking pretty nice and is definitely shaping the market movement. And so new lows again yesterday. Big move actually overnight, or in the early hours of yesterday, really in reaction, further reaction to the FOMC statement that was, and we set a new low, new 3-month low of 143.04 yesterday. So that's a level for us today, and we're certainly we see the dollar strength scenario continuing. There's no reason why it shouldn't. So we're kind of neutral to short on euro dollar.